So Stephen is in this position. There's 28 days, tranched in. The July 10 calls recommended for 52 cents. Okay, obviously right now they're 5 cents, so this is not a good trade, bad trade, terrible trade. Stephen tranched in. That's exactly what we teach to lower your cost basis. Stephen's long 10 for 31 cents cost average. So 310 of risk, and now these are worth $50. So obviously no bueno, right? Now, Stephen, for one, that sucks, sorry, but we ain't out. There's 10 days left. I mean, there's 28 days left. Now, I would make the assumption that because you tranched in 3 times, that you're at the amount that you're willing to risk on this trade. So under that assumption, you're in. You're moving on. You have 28 days. Maybe it works, maybe it doesn't. But now the real question I would ask is, I would want to look at your portfolio and what else you have that can protect it. But otherwise, sometimes these things are just losers. So what I was pulling up here is the delta. The delta you can use to give you an idea of the probability of a position ending up in the money. And 9% doesn't suck. I mean, Stephen, it's your only play. Honestly, the good play, or the good the positive, if we could take a little positive out of this, is that you're still 4-cent bid. These still traded 8 cents today. The stock is still moving quite a bit. It does have, I'm surprised the volatility is this low considering how much it's moving, but I don't like the idea of buying more time. When you buy options, and this is just for everybody, like these 8s, right now the stock's at $7.89. These 9s, let's say, this isn't real. Like this here, 13 cents, 15 cents, it's not real. What I mean by it's not real is this is just a contract that says, do you want to buy app stock at $9? And if I decide, yeah, I'll buy 1,000 shares for $150, I could buy 1,000 shares at 9. In 28 days, I can decide, do I really want to have those shares or no? Because if it's trading under, the exchange knows that I don't want to be long from 9. So just remember, guys, it's not real. It's fluff, it's premium, it's time. So when you are an option buyer, there are a lot of luxuries that come with buying options. A fixed amount of risk, you can never lose more, right? When you get into this position, sucks that it's down and it might be 100% loser, but you're also deciding what you're betting or risking before you get into the position. But with those benefits, the math will tell you that you're going to lose more than 50% of the time. If you can trade 40% on buying options and make that profitable, that's really, really, really good. In this last June expiration, we were, I think, 9 for 4. So it's not over. It doesn't look good, Stephen, but you're doing everything right. It's not over. Stay in the game. We have 28 days left. What you might consider doing is you might consider, if this is something that you're concerned with, if this isn't like just another trade, what I would suggest is any movement in apps that allows you to reduce at a break-even level. If it does come back real quick, I would take advantage of that, just because if you're concerned, don't allow it to retrace and then pull back and, expect the world.